Welcome back. Asian Paints, that's among the top Nifty gainers this morning. We've seen, the paint sector be in focus for the last many years because of Birla's announcement, but very few days in the recent days, we also had the JSW Paints deal that came by. This morning, ICICI Securities has upgraded the sector, Asian Paints and Berger Paints, after a 4-year negative stance. So to discuss this and more, the author of the report, Manoj Menon, joins in our studio from ICICI Securities. Manoj, thank you so much for joining in at short notice in our studios. You've reversed your stance after 4 years. I have to ask you this question. Did this reversal come after the announcement on Friday, or were you considering it before that itself?
Mangalam, practically speaking, it's very difficult to actually execute a report in 24 hours or 48 hours, right? So, look, I think we have been actually focusing on a lot of channel checks on this industry, apart from talking to a lot of our network checks, etc. And this view was coming, in our view. So me and my colleague Anirudh Joshi keeps discussing, what the inputs we have been getting. So 3 or 4 things to highlight. One, that in the last 12 months, Birla has already reached a dealer network of about 55,000, which is almost about 60% of what an Asian Paints has got today, right? For a market share which is less than 1/10. So assertion number 1 is that they have done the relatively easier part of getting the dealer. Now you've got to kind of get the throughput in, right? I'm not saying they will not, they will, but the big, let's say, low-hanging fruit is done with. That's point number 1. Point number 2, there has been an industry deceleration over the last 12 months, which we believe is short-lived. In line with the discretionary consumption uptick expected in the next 12 months, we expect paints also to get better. Second aspect is paint industry had a few one-offs also. It's a long conversation, but we have published 2 weeks back on what are those one-offs. Third aspect is paint stocks are currently at about -1 standard deviation. Point number 4, the margins also appears a 15-year low, and I can go on and on, right? I mean, so we have been observing a lot of aspects, and then the timing is just a coincidence, actually.
So why did you not then increase it to buy as against add? Because it's reduce, add, and thereafter it's buy.
That's right.
What will make you buy?
That's right. So simple one in a thesis, which a lot of my colleagues in the morning meeting just asked today, was that, look, I think we are fairly clear that the paint stocks have bottomed out, right? And that's why we got a sort of, let's say, an optimistic view on an ad rating. Now, the difference between an add and buy is that when I look at the true medium to long term, yes, we also have a bit of a concerns about what the exit multiple which the paint companies should command. The reason being that, in the last 5 and 10 years, companies like Indigo Paints, whether it is Astral, whether it is a small, business in paints by Pidilite, and Indigo Paints, and as well as now, the current player, right, Birla, have actually proven that the consensus probably overestimated the entry barriers in paint industry, right? So it's not necessarily such a high entry barrier that is assumed to be 10 or 15 years back. So we are optimistic. But then, let me put it this way, the day when which we believe, based on our market checks, that Birla will grow in line with industry growth or a tad or a shade higher, maybe that's a time for to actually go for a, even more optimistic thought process.
How do you expect the market share to now settle between these top 3-4 players, say 2 years, 3 years down the line?
Yeah. Now, if you look at the shares currently, right, Asian is at about 50, Berger is around 20, Kansai is around 10, 11. And assume for a minute that JSW Axo goes through, the combine will be similar to Kansai, right? Then there is Indigo at about 3% and also Birla currently about a little more than 3%. We expect Birla Paints to actually to reach about 10% in about 3 years' time, right? Which also means that in the medium term, we also see a scenario in which there is going to be a tough fight for who is going to be the number 3.
Okay.
Right? Between Kansai, Birla Opus, and assuming JSW Axo goes through, right? I mean, the 3 players actually.
Who do you think, though, going by what they have to say, Birla has been very, very confident in what they're saying.
Right.
And also in terms of profitability for Birla, because that's the one who's come in there and disrupted things. How do you see their profitability pan out from here on?
I think profitability will take some time because there is a case study of Nippon Paints in Tamil Nadu going from almost 0 to 5% market share or even higher. And the day they tried to or attempted it to make it profitable, I really don't think they were able to hold on to the shares, right? That's a risk of any incumbent. I'm sure that, the Birla Opus management I got a lot of respects for, will be smart enough to understand this and appropriately align their profit expectations in the shorter term.
What you said really is, it echoes what a lot of the industry experts have been saying as well. It is easy to get revenue share, not as easy to get the profit share. The other thing that stood out is you said everyone's fighting for the number 3 player. This at a time when Birla's had explicitly said that they are likely to be the number 2 player, We spoke with Berger on Friday, and they also said that number 1 and number 2 are going to stay no matter what happens. The fight will be among the number 3 players itself. In fact, what we'll do is we'll continue this conversation. Let's hear out what Abhijit Roy had to say to us on Friday as soon as the JSW and AkzoNobel deal was announced.
Changes much, because these two players, as you rightly said, have been there in India already. Both JSW and Akzo have been operating in this market. We are more or less aware of their strengths and weaknesses, and we know what they are doing in the marketplace. So it's just a change of hands, possibly a change, in the management style that it is operating in. So from that perspective, there might be some small changes, but overall in the industry, nothing changes much. What does happen is that there is a consolidation which is happening now. So there are now 5 players in the industry. The top 2, Asian and Berger, remains. The 3rd, 4th, and 5th position is up for grabs, and that's where the competition will be intensifying a bit. Between Birla, JSW plus Akzo and Kansai.
All right, so that was the management of Berger Paints saying that they are not very perturbed by this development. Both these players have been in the market in the past, and they are very well versed with their competitive strategies as well. We are discussing the paint space with Manoj Menon. Manoj, you've upgraded your stance to for Asian Paints and Berger. You were always positive on Kansai and Aerolac, and you were also one of the few who had coverage on AkzoNobel. With this deal going through, what do you view on AkzoNobel from here on?
So look, we have always viewed Dulux as a brand, having far higher, I would say, awareness versus availability. Or put it simply, it's been a legendary brand, but not necessarily has got the, let's say, the care and investments which probably deserved in the last decade, thanks to probably the scenario which an AkzoNobel Envy was going through, right? Not necessarily enabled to invest for growth, etc. And we strongly believe that, with any group, now including JSW, who may have a willingness to invest for growth, right? Dulux can recover quite smartly.
So do you think they have the capital to invest for growth after having paid what they did for this business? And at the same time, one thing that stands out in the paint industry is that everyone has very clean balance sheets. Right. There will be a company that will start off with a fair amount of debt on their books. So how much elbow room will they have to further invest? And JSW Paints has been around for the last 5 or 6 years. They haven't crossed 2,000 crores in sales, right, and they haven't crossed more than 1,200 crores in organic sales. So what makes you confident that they will be able to grow, AkzoNobel the way it deserves to be?
So 3 things actually. If you look at AkzoNobel India currently, right, the current listed entities P&L account, it has got one of the highest gross margins and one of the lowest EBITDA margins. So assertion number 1, that it's a case of corporate overheads and the synergies, actually, or rather, the synergies playing out, right? Second point is actually that Akzo, India used to pay around 3.5% royalty to the parent. After the deal, the brand is going to reside in Indian entity, so that royalty is also a saving, right? Point number 3, we do strongly believe that there is going to be SG&A savings as well. So let's say, while I don't have a number, whether that 15% reported margins will settle at 20, 22, 23, I don't have a published view on it. So there is a scenario that it will be higher than 15, right? Which essentially means that under the new combine, there is going to be enough resources to invest for growth. And now that honestly depends on how much JSW wants to, what are the big game plans, etc., for the paint outlook, what they may have.
Okay, just one quick final question. Now, this target price that you've raised, 2,700 for Asian and Berger, it's about 650. Is it a valuation reset? Because you said valuations are below standard deviation, or have you materially increased the EPS estimates too?
No, actually, if you ask me, we're not really touched the EPS estimate by, materially. It's still, honestly, if you ask me, next couple of years, if you look at the EPS estimates, rather the CAGR, it's still single digits. Right? Okay. No, honestly, not exciting. That's the reason it's not a buy rating, right? It's an add rating. But we genuinely believe that from -1 standard deviation, we are essentially leaving the worst is behind. Time to actually, let's say, for example, in the last 12 months, 24 months, we would have advised investors saying that, look, you don't have to own Asian or Berger. We are changing that stance to say that at least you should not be underweight.
All right. All right, take that point. Always a pleasure speaking with you, Manoj. Thank you so much for joining in and giving us your view on the sector. We await a longer conversation on the entire consumer space once you return from your Japanese holiday as well. In case you need any tips, Rima was just there, so she'll help you with all the travel plans that you need.
Have a good one.
Have a great. Thanks so much for coming down.